All right, well, it's time for our triple play, and Dave was mentioning it. The NASDAQ, the leader in today's market. It's interesting because Microsoft, the tech giant here, coming out with a warning about their guidance. So the company saying that they now expect to have a fourth quarter guidance of $51.9 billion to $52.7 billion. That's down from the previous estimate range of $52 to $53 billion. A lot of this because of the stronger dollar. They also cut its earnings forecast for the quarter. The move comes after Microsoft's head of finance, Amy Hood, warned back in April that exchange rates could weigh on guidance. But Praz, the stock was initially under pressure today, off just about 2% in early trading, although it looks like investors seem to be okay with the fact that they're lowering guidance. It's not that big of a headwind here, at least for the sector at large.
Yeah, the business itself is pretty good, pretty strong. Cloud obviously doing well. More of this exchange rate hit. You know, it's funny. It's a conundrum of like people afraid of inflation, but the dollar's as strong as ever, right? It's a really strange kind of conundrum there. You know, speaking of big dollars, my play today is Ford. They're spending about $3.7 billion on new hiring, new UAW auto worker hiring there. They want to support their production, not just the gas-powered cars like the brand new Mustang and a brand new mid-size Ranger, but also they want to support the production of the Ford EV Lightning F-150, as well as a brand new commercial truck. They're calling this Ford Pro vehicle, probably a light-duty van of some sort. So Ford really spending big here. Again, on top of the big money, they spent on 11,000 new workers down in Kentucky and Tennessee for their EV plants down there. So Ford really upping the game here with their monetary spends here. This while they're still waiting for that return on those EVs to come up, hopefully in the next 2-3 years.
Probably helps in the contract negotiations with the UAW that are still a year away, right? Interesting, though, because when you see their sales were down in the month of May, but their market share went up because everyone else was down more. The Ford Bronco, that's kind of leading the way, huh? That car is back big time.
I mean, a lot of buzz if you can actually get your hands on one.
Can't though, right?
Did you test drive it? You did, right?
I did, and it's wonderful. It's like
but you can't get them, right?
You really can't, unless you want to pay a lot of money above sticker at a dealership. You cannot buy this truck. Still, this is why you're down 4.5% compared to last year. You know?
Yeah. Hey, that Ford F-150 Lightning, though, that's going to lead the way. You know, I love that. My play is Block today, formerly known as Square, and the stock symbol SQ. Shares popped big time today on news that Block will work with Apple to integrate Square payments with the Tap to Pay feature on iPhones, which will launch later this year. Customers would only need the Square app and their iPhone in order to accept payments, no hardware. The stock was up more than 7% at one point on the day, now up more than 5%. But when you look at the big picture, still down 70% from their 52-week high and down 46% year to date. So a long way to go.
It certainly is a long way to go. And we know that Square, or Block, I should say now, isn't the only player in the space, which has been hit hard. It's interesting when we take a look at what Apple has done, though, in the fintech space. So now they have this partnership with Block. They launched a credit card back with Goldman Sachs in 2019, I believe. There's rumors of a buy now, pay later service. So they're getting more into their services side of the business, trying to diversify. Will be interesting to see whether or not that pays off for the company.
You know, I read that headline and it's like, music to Square investors' ears to see Apple tie in right with that tap to pay. I mean, that's just a natural time, really necessary there. The stock has been so horrible this year. Really good to see that they're doing this one little nice deal with Apple. I mean, and a huge space there, right?
Yeah.